Now let's prepare the balance sheet for the garden spot at the end of the first year of its operations. And then we'll be able to take a look at its financial position at that point in time. We've done a lot of work. Things are getting more and more difficult. But here with the balance sheet, I think we're going to be rewarded by how straightforward it is to prepare, given all of that work that we've been spending our time doing so far. Recall that a balance sheet has on it assets, liabilities, and owner's equity. And recall that the total assets will have to be equal to the total liabilities plus owner's equity. Let's reflect on the work we've done and think about where we might find information to help us build this balance sheet. Let's go back to our structured workspace. Note that every T account on this workspace is either an asset account or a liability account or an owner's equity account. And note that we've already done the work even to get the ending balances in each of these. So preparing a balance sheet is absolutely straightforward after we've done all of this work. All we're going to do is list each of these account names on that balance sheet in its appropriate section, and we're going to pick off the balance, the ending balance in its T account, and put it on the balance sheet right beside the account name. Let's see how easy that is. Note that I've listed already for us here the 4 asset accounts that we saw in our structured workspace: cash, accounts receivable, inventory, and property, plant, and equipment. And you might recall that we've been calling that a truck and some equipment. And oftentimes companies will combine all of those longer term assets into one account and put them on the balance sheet under a term called PP&E, or property, plant, and equipment. So I've listed all of those accounts, and notice that I've listed them in order of liquidity. What does that mean? That means in order of how quickly they could be turned into cash. Cash is cash. It's easy to turn cash into cash. It goes first. We expect to collect accounts receivables from customers in the near future. That's pretty liquid. We expect to sell inventory in a not too distant future. That's pretty liquid. The least liquid of these assets are the longer term assets like the truck and the equipment that the company expects to use over time. So I've listed them in that order. Okay. Let's take a look at the cash T account. First account we put on the balance sheet. We have an ending balance of $3,010. We're just going to put that right here. Piece of cake. Let's take the next one, accounts receivable. We've put that account on the balance sheet. We're just going to take the ending balance, put it up here. Piece of cake. We're going to do that with each of those asset accounts. So we have inventory, we have property, plant, and equipment balances, and then we've totaled them to get total assets of $125,610. Pretty simple, wasn't it? Let's take a look at the liabilities. We're going to do exactly the same thing. We go to our workspace. We've got 3 liabilities. We're going to list them on the balance sheet in order of liquidity, right? These two are very, well, in order of when we expect to pay them. We expect to pay these soon. This loan is going to last 4 years, I believe. So we'll be paying it over time. It's a longer term liability. Let's pick one of those T accounts. We'll pick loan payable. We've put that name on the balance sheet, and we're going to take its ending balance and we're going to put it right over here. Piece of cake. We're going to do the same thing with accounts payable and wages payable. Pretty simple. Don't need to do too much detailed work there. So we put their balances from the T accounts into the respective spot on the balance sheet. We total the liabilities and we see that we have liabilities of $60,000. Let's move to owner's equity. Pretty simple. We have 2 owner's equity accounts. We're going to list both of those on the balance sheet. Capital stock, retained earnings. That's the order that we typically list those on a balance sheet in. We don't have liquidity guidance there, but we typically put our capital stock and then our retained earnings after that. Let's pull one of those T accounts, capital stock, 60,000 ending balance. We put that over here. Another piece of cake. Retained earnings, same thing. Retained earnings, 5610. Okay, when we're done, we sum them all up. We see that owner's equity is 65,610. So the total of liabilities plus owner's equity is $125,610. I think you've heard me say that number before. Where have we seen it? Right here. Assets equals liabilities plus owner's equity.